few weeks ago, I was asked a very interesting question by one of my Instagram followers, Ms. Junebug Jennifer. And it's basically related to long-term stock market investing strategy. The buy and hold strategy for the long term. How can you ensure that you're making a profit with your investments? And this is a very valid question to ask. I was always thinking about bringing this video out to you guys, but just wasn't sure about when. So if you guys have a chance, make sure to show Miss Junebug Jennifer some love on Instagram for pushing this video out for you guys. And if you have some more questions to ask me, then feel free to ask them, guys. Who knows, I might make a video on it, just like this one here. But back on topic, I can tell you firsthand that it's difficult to do this, to monitor how your investments are doing if you don't have a stock market investment tracker put in place. And so in this video, that's exactly what I'm going to be doing. I'm going to be showing you guys a step-by-step guide of how to set up your own stock market investment tracker. And for the people that may not have the time, then feel free to send me a direct message on any of my social media links down in the description box below, where you can purchase a tracker for £24.99. But before I go telling you guys some of my stock market secrets, I need you guys to do me a little favor, and that's to tell YouTube how good these videos are, because it really takes a sizable chunk of my time out, guys. So by liking this video, sharing it too, and subscribing with the notification bell on as well, what you're doing is you're letting YouTube know how good these videos are. Now back to stock market investment tracker. All I really just ask for you guys to have is a laptop and also Microsoft Excel. To be honest, you probably don't even need Microsoft Excel if you don't have it, guys. You can end up using Google Sheets via the Google Drive, which is completely free. It virtually does the same thing, to be honest. All you just need in that case is just some decent internet connection. But for the purpose of ease for me, I'm going to be showing this via Microsoft Excel. All it really just requires is some basic Microsoft Excel knowledge. Oh, and by the way, if I'm going way too fast for you guys, then feel free to pause this video, slow it down, whatever you need to do to make sure you don't miss any steps. Very important. So flicking over to Excel sheet now. The cells that are in blue writing are inputs and therefore require you to manually put in your figures into these cells. Starting off with the first two columns, A1 to B15, you want to type anywhere into Excel A2 to B5, the title name investment. You see cells A6 to A15 represent when you bought more shares. The 1 means that it is on, while the 0 means that it has not been activated yet. So every time you purchase more shares, you start the next row down in the section by putting a 1 there. This then should pop up in cells B6 to B15 as round 1 purchasing and so on. You start the next round down in the section. You then want the next two columns to be titled the stock name and the stock symbol / ticker symbol for the stocks you bought shares in. The next column should show the investment style, which is in other words how you have bought those shares. For simplicity reasons, this Excel sheet has been based on buying all of the stocks and shares via Stocks and Shares ISA. So for me it would be 1, as I would use this way of acquiring stocks. The next section of my tracker file shows the number of shares you bought at that time, the price you bought those shares for, and also the day and the time you purchased those shares. This is very important because this information is used for the next part I'm going to discuss. But for this section so far, you have the cost for solely purchasing those shares. So this will be the number of shares multiplied by the price per share you bought them at. However, depending on what type of trading platform you use, the next section, which is the B section, will vary. For me, I use Barclays Smart Investor, as you can see in the cells I1 to O1. Which means I have to pay £6 every time I want to purchase shares, so that is a fixed rate. You then have capital gains tax, which is 0 for me, as I purchase shares via an ISA account. This is arguably one of the reasons why I always suggest purchasing shares and stocks in the UK via an ISA instead of not having one. You can reduce the amount of tax you have to pay. Unfortunately though, you can't avoid the annual fees that some trading platforms ask as a requirement. In this case, Barclays Smart Investor charge an annual fee of 0.1% of the total cost spent on buying the shares in cell K6. However, this is an ongoing cost, so you need to use a formula which minuses the current date from the date of purchase and divides it by 365 days in a year, multiplies it by the total cost of purchasing those shares in K6, and finally multiplies that figure by the annual fee rate, which in this case is 0.001, i.e. 0.1%. You also might have other fees to consider as well as monthly charges on the account to look at. Barclays Smart Investor charges £4 per month. However, because this monthly fee is also an ongoing cost like the annual fee, you have to use a similar sort of formula. Only in this case is the current date minus the date of purchase divided by 30 days in a month and multiplied by £4 in this case, as this is the Barclays Smart Investor monthly fee. You then need to think about the SDRT, the stamp duty reserve tax, which for an ISA account is down as 0.5% of the total transaction cost. So you want to multiply K6 by 0.005, i.e. 0.5% SDRT rate, by cell A1. And finally, there's a total cost to consider, which includes all the fees and cost of shares using the sum function, as you see here. From all this information, you can find out the total amount spent buying shares, which will be the total sum of all the costs involved, including the monthly charges up to the current date and the total sum of the SDRT. The total amount spent only on shares will be the total sum of cells K6 to K15. Now that's majority of costing done, but what if the stock actually pays a dividend? What do you do then? Well, I've actually set out a second part to this stock market investment tracker that accommodates for this, but bear in mind this is based on automatically having a dividend reinvestment scheme set up for yourself. Check this out. Somewhere between cells A16 to B19 you should place the title dividend. Similar to before, the one in each row symbolizes a new row of dividend reinvested. Of course, if the stock you're investing in does not pay a dividend, then this section will all be filled out with a 0. But I still suggest creating this section because eventually chances are you will need it. Similarly, you have columns C and D, which show the type of stock and the symbol for the stock in the market. You also have cells E20 to E29 to show your investment style. This will be the same as above if you have an automatic dividend reinvesting scheme set up with your trading platform. Column F shows the number of shares owned prior to the dividend payment involved. You also need to put in cells G20 and H20 going downwards, the current share price when the dividends have been paid out in pennies and also in pounds. Column I, row 20 and downwards should have the dividend yield, and beside it should state the date of purchase. Cells K20 downwards is calculated by dividing I20 by H20 and multiplying it by the number of shares owned prior to the dividend payout. This gives you the number of dividends you are being allocated in the form of shares. To convert this figure into dividend amount paid per share in cells L20 to L29, you have to multiply cell K20 by the relevant number of shares owned prior to dividend payout and divide it by the current share price at the dividend payout. And finally, to find out the total amount of dividend paid by the stock into your account, you simply multiply the dividend amount per share paid by the number of shares owned prior to the dividend payout. Unfortunately, you have fees to consider when it comes to automatically reinvesting dividends, and for Barclays Smart Investor, it's a £1 fee. Don't forget you might have other fees to consider, and definitely remember stamp duty tax, which similar to before is 0.5% of the transaction cost, just like before. But instead multiply 0.005 to the total amount of dividend paid by the company. The total amount reinvested back into stock ownership, including fees, tax and so on, will be the sum of relevant rows from column M to column P. You then have to find out how much additional amount is taken out of your account to pay for this reinvestment of your dividend by subtracting the total amount reinvested by the total amount of dividend paid by the company. And lastly, in the dividend section, the total amount spent solely on reinvesting dividends can be found in the relevant rows in column M. We now have all the information we need to finish the DSLF investment tracker. Going back to the upper section of this investment tracker in cells U6, the total number of shares owned including dividends will equate to the sum of all the dividends bought plus the sum of all the shares reinvested by dividend payment. You can then find the average share in order to break even by adding all the total amounts, so cells S6, T6, R20 to R29 and S20 to S29, and dividing that all by the total number of shares owned including the dividends now. And this figure is very important because it allows you to look at the current share price, and if it is above this figure, then you know you're in the profit region, whilst if it is below that figure, you'll be in the red region, which means effectively you're making a loss. So you can see that cell W6 is an input and allows you to put in the current share price you see your stock at. while cell X6 divides W6 by V6 and minuses 1 from it. So in this case, you're up by 17% in stock A. The share price right now rose to £12 per share. So now you can see how powerful this investment tracker is. But what's really interesting to see with this tracker is that if you change the number of shares and those owned prior to dividend to 10, so you've only bought £100 worth of shares in this case, your performance moves from 17% all the way down to negative 14%, even though the current share price has actually risen. This is why I always say, guys, whenever you're investing money, don't invest any less than £300. Why? Because it makes it so much harder for your investment to make a profit because it's so busy covering all those fees. And as an investor, it's your fees that you have to really be conscious about because they can really rack up. Oh, and don't be fooled by some of these investment platforms as well, because I know Barclays do it, What they do is they give me a review, overall picture of how my stock investment portfolio is looking like, but they miss out certain fees, guys. So really, they're making it seem much better than what it actually is. When you actually look at everything in its entirety, you'll notice that actually your stock investment portfolio is not doing as well as what they initially made it to appear like. So be conscious of that as well. And also, I want you guys to note that that one tracker that I showed you is just for one stock. So as you acquire more stock, each of those stocks are going to need their own sheet, their own investment tracker. So then to look at your overall stock investment portfolio, you're going to need to look at the total amount of money you've put in to acquire those stocks and the total amount that you're getting out of it. That will give you the overall performance of all those stocks. But that's a fairly simple process, as you can see, compared to what I've just shown you. And when you look at this overall, what I reckon you'll see is that some stocks will do considerably worse than other stocks. But this is what it means to have a diversified portfolio, You can have the stocks that really do well, pick up the weight for the ones that don't do so well. It's part of risk management. Well, that's all I've got to say for today, people. I hope I've shown you guys a step-by-step guide of how to set up your own stock market investment tracker. And don't forget that if you guys don't have time to do that, then feel free to send me a direct message. My social media links down in the description box for a price of £24.99 for the tracker that I can send across to you. Before I get going, make sure to show my channel some love by liking this video, sharing it too, and subscribing with notification bell on as well. It's your favorite YouTuber, Decent Learning Finance, sharing my thoughts and my experiences with you guys every Sunday at 3 p.m. Have a great day, people. Bye. Whoa.